Could the FTX collapse have been prevented if they used Chainlink's Proof of Reserve oracles? The markets have had a relief rally overnight. What happened? Well, the US CPI data came in positive. Let's learn how this affects crypto and much more in today's news. Chainlink Labs, the company that has been running a very successful Oracle service for blockchains, has reiterated that they offer Proof of Reserve feeds, which would have prevented the FTX collapse. This comes after CZ recently stated the importance of exchanges offering full transparency and later posting the full holdings of Binance for the public to scrutinize. Have a look at the Chainlink founder Sergey Nazarov explaining how Proof of Reserve could have prevented the recent collapse of the last few days.
The recent FTX drama is unfolding in a way that may harm the entire crypto industry. What could have helped avoid this? What is Proof of Reserves, and what role could Proof of Reserves have played in solving this problem?
Sure. So this problem is not actually a security issue, as sometimes happens with exchanges where they become hacked. This is just a solvency issue about the balance sheet of the exchange backing the depositors' value that they put in, right? So the ability to settle with depositors. So it's just a question of what the balance sheet of the exchange is. What Proof of Reserves would have done in this case is would have proven in real time how much value the exchange had and what form that value took. So basically, this whole situation with FTX is about the depositors of FTX realizing that the thing backing the value they have at the exchange was in a form that they weren't comfortable with, namely the FTT token, right? So what Proof of Reserves does is it proves the reserves of an entity such as an exchange. And it does that by pulling data from the places where those reserves are. Those reserves could be in a bank account. They could be in the form of a token on some chain. So Proof of Reserves would have resolved this entire problem from the beginning by, on an ongoing daily, hourly, second-by-second basis, proving what FTX had on its balance sheet to pay back depositors. And so depositors wouldn't have been surprised to learn what was backing their deposits, and therefore they wouldn't have engaged in a bank run. So Proof of Reserves would have proven on an ongoing basis that FTX is solvent, and if people didn't like the way that FTX was solvent, they could have made gradual withdrawals instead of everyone learning suddenly that the solvency of FTX was in a format that they didn't like.
Sergey went on to say that they have recently seen a huge spike in the desire for their Proof of Reserve oracles. This could indicate the industry is learning that this should be a no-brainer requirement to prove a crypto business is trustworthy at this point. Proof of Reserve can stem contagion risk in crypto, so if there was a situation like Luna where the stablecoin collapsed and many businesses were affected, we could very quickly tell which businesses were affected and which businesses weren't by using Proof of Reserve. It's going to be an important tool for the ongoing health of any entity handling people's funds, whether it's traditional businesses, crypto businesses, or even DAOs. Remember to hit the like button and subscribe for more daily crypto news content. Bitcoin eyes 18K following good US inflation report. The US CPI data has a strong influence on the crypto and stock markets when it's released. It's a good idea to keep tabs on when the information is released so you can preempt how it will hit the market. There's a link posted in the description below. Have a look. Every month the date is listed for when the CPI will come out. The dramatic price dive caused by the FTX collapse has been somewhat cushioned by positive US CPI data. The data was released overnight with an expected CPI increase of around 8%. The CPI came in 0.3% lower than the expected at 7.7%, causing a momentum swing for crypto in the positive. After the data release, the price soared from 16K lows back up to about 17,800 before leveling out once again. The idea here is that when the CPI is lower than expected, crypto and the share markets react bullish. When CPI is higher than expected, the sentiment is typically bearish. Compared to the previous month's CPI data of 8.2%, this figure is much lower, which also contributes to the market sentiment. The US dollar index has also been traditionally correlated with Bitcoin. A rise in the DXY typically correlates to a fall in Bitcoin and vice versa. Like Davis pointed out, this is the first real candle under the 100-day EMA for the DXY since July of last year. That's a pretty big deal. Altogether, CPI data and the DXY news is quite a compelling argument for a crypto bounce that would cushion the FTX fallout. Let me know what you think in the comments below. Are we headed to new lows below 15K, or are we going to sustain 18K and slowly head back up to the 20s? OpenSea pledges to enforce NFT royalties after creator backlash. Recently, we covered the news that Solana NFT marketplace Magic Eden was pushing for NFTs with royalties as a new asset class on the blockchain. This would help to create a default standard for the industry and to push creators to be well compensated for their artwork. Unfortunately, without this established standard, creators kind of get the short end of the stick. The most popular Solana NFT marketplace was forced to remove their NFT royalty fees after their competition, having already done so, started taking market share. Businesses are strongly incentivized by the money that flows in, which oftentimes compromises on what would be a higher standard for creators in favor of what saves money for the consumers. NFT marketplaces have been in a race to the bottom to remove royalty fees from NFT sales. A typical fee would be on the resale of a particular NFT that would result in the creator getting a 5 to 10% cut of that fee. OpenSea has now announced that it will continue to enforce creator royalty fees going forward as an optional fee. This news comes after creators pushed back against the removal of the fee. To me, this speaks volumes about how much we genuinely value digital art and the creator that made it in the NFT space. NFTs are traded more like kind of casual collectibles for fun, but they aren't really taken seriously as something that holds value, like wealth, as a risk-off asset. A further example of this is the erosion of the OpenSea Bored Apes Yacht Club NFT values recently. The supposed blue chip NFT collections have still dipped about 82% from its peak price in April. CryptoPunks, the other well-known blue chip NFT collections, have actually risen above OpenSea in terms of their NFT floor price by about 6%. This could indicate that the collections that have been around longer have secured more value, or perhaps the market is just too young to meaningfully interpret the data at this point in time. Remember to hit the like button if you haven't already, and subscribe for more daily crypto news content. That's all for today. I'll see you next week for more daily crypto news.